Welcome to another day in the Matrix. This is Red Pill Podcast 125. Hope you're all having an amazing weekend so far. And what a week it has been in this market. But for you guys here in the Wolf Pack, if you've been following along the last couple podcasts I've released, you were prepared for this. We all knew something would go down in the 33rd week of the year. And here we are, major flash crash just a couple days ago. And we will be going over everything you need to know today about what to anticipate next and the potential recovery for this market. And I do believe this will actually be one of the best presentations I've ever put together. So please make sure to take notes. I'm going to be going through a lot of stuff, and I'm really excited to share this with you today because I worked very hard on preparing today's podcast. And without any further ado, I don't want to waste any time. We'll just get through a quick introduction and then move straight into this. If you are new to the Wolfpack, welcome. It's so great to have you here with us. If you've yet to get Discord access, just go ahead and send me a direct message on Patreon with your Discord username and the last four numbers after that username, and I will reply back to you in a Patreon message with your Discord server invite. And let's get back on track with our voting system for the altcoins next week. This week we didn't have too many submissions, but I was able to get everything prepared accordingly, of course with a bigger focus on the general market. But we will be going over a couple alts today. We have Uniswap, a Cash Network, Cadena, and a quick wrap up on XDC Network, since we did talk about the automatic rally on that token weeks before it occurred, gave out all the targets, they came to fruition, so that was very beautiful to see that play out. So I'll be sharing a wrap up on that. And let's get straight into today's podcast. So last week we reviewed all the blue moons in the stock market since the dot-com bubble. And the week before that, in Red Pill Podcast 123, we went over all the blue moons in the history of Bitcoin's chart. And now we're here and less than 2 weeks out from the blue moon on August 31st. And those last two podcasts came to life with a crypto market flash crash on the exact time frame we spoke about weeks ago. And it's pretty incredible to think we were most likely one of the few communities in this space to be prepared for this event, and with a very high level of precision. Having that flash crash exactly on the date of August 17th and into the following day, so far Bitcoin hitting its lows into the 25K territory on the 17th of August. And most of the altcoins rebounding off of that initial crash date as well. This was a textbook liquidation event, and I'm sure a lot of this crypto space was shocked. But here, we knew it was just another day in the Matrix. I know they gave out all their exoteric reasons for it with Evergrande and this, that, and the third, and how it affected Bitcoin, but it's clear to me that every single project was affected by this, and it would make no sense that Evergrande defaulting could bring down XRP's price target that quickly, that fast, etc. So anyways, we all know the exoteric bread and circus is needed for the masses, for the majority, for the people that learn everything off of tweets. But for you guys here, you are in the process of expanding consciousness, as I am, and you are always seeking gnosis. You know that everything that's popular is wrong, and everything that is exoteric is just food for the masses, and it's never truth. And the truth requires you to seek. And hopefully now we've learned a lot through this event. I can't even believe it was the way it was with such precision. So I got very motivated by all of this. And today we're going to focus on what to expect next after this flash crash by reviewing what has happened in past cycles. Although we are very limited in our data for Bitcoin and the overall crypto market, which I say often, of course, we'll do our best to analyze what's going on, keeping our emotions on the sidelines in the process. It's also very important for us to review the major indices, since we finished off the week down about 2.5% across the board regarding the Dow, S&P, and NASDAQ, with one of the biggest single week corrections we've seen in the stock market since the week of the Silicon Valley Bank collapse in March. And to give you guys something to consider for Bitcoin here, that was right in this moment where we touched slightly below 20K and then had a nice rebound off of that. So we're talking about one of the single biggest red candles that we've seen in the stock market in the weekly chart, actually since around that time frame, right over here. Okay, so we'll be getting into today's podcast, but before we move into our weekly recap of the stock market, just a couple things to mention. This upcoming Tuesday, Wednesday, and Thursday will be the 15th annual BRICS Summit. I just released a presentation dedicated to that, and that was just released a couple days ago, titled Yellow Bricks Road Decoded. I'm sure most of you are aware, but if you haven't, make sure to check that out, especially before we move into this next trading week, to be prepared for a potential economic power play to be announced from the BRICS nations, which is something I'm anticipating. We're just a couple days away from the summit and so close to the month of September with the end of Jubilee. We could all hear the clock ticking, so there should be no surprise if any big changes are being announced onto the world stage around this time. I know the Wolfpack is beyond prepared for what's to come. And just 3 days from now, on August 23rd, Mercury will be stationed retrograde and going direct on September 14th, just about a day before the first day of Rosh Hashanah. So we will consider that as part of our analysis today with Bitcoin, since I have been keeping track of all the Mercury retrogrades since the C19 crash back in 2020. In preparation for today's podcast, I went back over my Bitcoin Mercury retrograde chart, as you can see here today, cleaned it up a bit and updated the data. So we'll be diving into that today as well. Again, like I said, it's going to be a very special podcast today. And this exact date that Mercury goes retrograde on August 23rd is literally 23 days before the start of Rosh Hashanah. So we're going to be getting into this date really quickly. We have the 23rd, and then we have here the start of Rosh Hashanah. You can see the 23rd day of this month and 23 days before moving into Rosh Hashanah. And this will be the end of what we call Jubilee, which you can see is 23 by the code. And this happening on a Wednesday. This is very important. I should actually get to that in a moment, but we're talking about the month of August here, and August giving you that 23 by the code. We're talking about the 23rd day of that exact month, and we're talking about Mercury stationed retrograde, Mercury giving you that 23. And we're currently in the Hebrew year of 5,783, moving into the end of this Jubilee. That's your 23, adding up the year in date numerology. And this will absolutely affect Bitcoin 23 in the same cipher. This is very significant to have all these connections in the same cipher. And since this is about Mercury, note how August 23rd, the date we're talking about when Mercury is stationed retrograde, that is a Wednesday. Miércoles, the day of Mercury, and it lands on the day leaving 130 days in the year, which naturally becomes 13 when you're utilizing the rules of numerology, removing the zeros, and Mercury by the code is giving you this 103, again, becomes 13. And a gem that I shared a couple weeks ago back regarding August 17th, which was the flash crash date that we just had. This was something I shared a couple weeks back. If we connected that to April 20th, which is our solar eclipse date and the date that started our solar cycle, which I'm going to be talking about the solar cycle a lot today, you'll see that those dates are exactly 119 days apart. Again, that's our 119911 code. I've been talking about this all year, and notice how April 20th, the solar eclipse, was a 13 date numerology. We were just talking about Mercury and all of these 13s. It's pretty fascinating how this all comes in together in this code. But you'll see that those dates are 119 days apart. Just a reminder, this 911 code is very important this year since it's the 22nd anniversary since the 9/11 ritual. 22 being the master builder, master destroyer number. I've talked about this quite a bit. And on the 25th, we will have a 22 date numerology this month. The first day of Rosh Hashanah this year was the 15th of September, which you can see is a 22 date numerology as well. Also, the start of the year of the rabbit, which is our Chinese New Year this year, was on the 22nd day of this Gregorian year. And since we were talking about the number 13 before, I want you to consider that September 13th, this is a very important thing. September 13th is 33 weeks and 3 days since the start of this Chinese New Year. It's significant because September 13th is 2 days after 9/11, the 22nd anniversary of 9/11, and it's 2 days before Rosh Hashanah. This is like a ripple effect. 2 days before, 2 days after, tied to the 22nd anniversary of 9/11. And 9/11 in 2001 landed on a Tuesday, another 2 connection. Of course, 2 being associated with Mars. Now, 2 days after, 2 days before, we're going to kind of discuss these 2s for a moment. Remember, if you take from September 11th of 2001, I think it's important that we go back to this time frame and we connect that to March 11th of 2020. You guys all remember this date because it was when the World Health Organization declared C-19 a pandemic. This is exactly 222 months apart. So I'm not just pulling these 2s out of nowhere. It's extremely significant. Now, 222 months is 18 years. 18 is half of the number 36. 36 can be perceived as 3 6s or 666. And if you take from when the WHO declared C-19 a pandemic to this upcoming 22nd anniversary of 9/11, you're going to see that these are connected by exactly 3 years and 6 months. The 666. Like I said, 36, half of that is 18. 22nd anniversary of 9/11 this year lands on an 18 standard date numerology. It's one of the most important numbers in Judaism. This is all coded. Now, just to go back in time a little bit, if anyone here remembers during the year of 2021 when I started my channel, almost a year before I made this prediction, I said that I expect C-19 to last until May 2022. So what I meant to say there is that I was making this prediction a year in advance. Sorry if that's confusing. But anyone who is following along in the Wolfpack back in 2021, you remember I used to talk about this on every single live stream, just like I talked about the Shemitah quite often. So I was sharing this idea that May 2022, we shouldn't have the same world that we had back in, for instance, May of 2021. And the reason for that was before it was tied to the 22 number, the 22. This 22 code was exactly 2 years and 2 months after the start of the pandemic. You can see from here when it started to May 2022, this is exactly 2 years and 2 months. And I was assuming that by the 13th, which is the 222 code, that we should be out of it. The reason for that is because that's exactly how long the Spanish flu lasted, which was this so-called virus basically just mimicking historically, and history does repeat itself. And when we got to around April into May of 2022, most of the world was already reopened for travel. Mask requirements were lifted. You can travel to most places without a jab, except the US, and that was on purpose because the USA is kind of particularly in this ritual for the Jubilee year. I've been talking about that in a separate kind of context, but for the most part, that prediction I had was absolutely spot on, and I don't really want to take credit for that because I was just noticing the pattern here, and it's that 22 pattern or that 222 pattern, okay? And at the end of the day, That's my job, to identify the patterns and to see how they fit into the present moment so that I could forecast what's most likely next to come. So this 36 connection that I shared with you moments ago, that's 666, remember 6 plus 6 plus 6 equals 18. And that is your date numerology on 9/11 this year. You could see that 18, separated by 3 years and 6 months since this event. And we can also look at this in another way. 3/11 date, 3 times 11 is 33. September 11th of this year is 33 weeks and 3 days since the start of the Year of the Rabbit. All coded in. And we're talking about 9/11 because it's that 22nd anniversary since that ritual. And you want to know what's really funny about the XRP army? They always use this term, or this number 589, right? Well, 5 plus 8 plus 9 equals 22. So it's really funny. I don't know if anybody here has noticed. I'm sure many of you here have noticed that, but I don't think too many people on the outside are realizing this code. And we've seen this before in the code of XRP. It's in full reduction, adds up to 22. Big reason why I've shared my upside target for XRP in the year of 2024 will actually be as high as 22 to maybe even 24. And the reasoning for that 24 has everything to do with the X being the 24th letter. I shared everything about the X in the last podcast that I released. But 22 would be really, really kind of like one of those numbers that I would feel we would get on like a wick, you know? So for me, I've shared that going back probably also a year ago. How I see on the next big cycle run for XRP, when it enters price discovery, we're looking for $14 to $15 and then as high as 22, 24 on a wick. So anyways, I am just getting started today. We have so much more to get into, so let's continue on our decode. Lately, to recap our decode on this number 13 that we were talking about moments ago, we know this number 13 is very important to the occult, but specifically in Judaism through Kabbalah, and exoterically because the Hebrew calendar has 13 full moons, and their new year, Rosh Hashanah, is always based on the new moon, transitioning from Elul to Tishri. They consider both the sun and the moon in their calendrical system. Remember, we were talking about the number 23, moments ago. Well, moon equals 23. We have full moon giving you this 43 in Chaldean, just like Rosh Hashanah in English gives you 43 in the same cipher. And it's amazing how the full moon in September this year is on September 29th. I want to go there for a moment. And this is the day leaving 93 days in the year. And we talk about this character quite often and this 93 connection back to Saturn. So that's pretty mind-blowing that this year in the month of Saturn, which is the month of September, moving out of Jubilee, the first full moon after we move into the new Hebrew year, it lands literally on the day leaving 93 days left in this Gregorian year, the day before a Saturn day. Just mind-blowing. So let's get into this a little deeper here, shall we? And before I was talking about the number 13 a little bit, and we have connecting this to Rosh Hashanah, which is on the 16th, technically. And you can see from the full moon and Rosh Hashanah, it's exactly 13 days. We're just talking about the number 13 and its significance in Judaism. And remember, this is all coming back to what we were talking about with Mercury, with the 103, and how Mercury stationed retrograde on the 23rd of this month, which is the 130th day left in the year. This is incredible how this is all coming together because this is in the upcoming BRICS summit that's about to go down in South Africa. So note how Rosh Hashanah this year lands perfectly on a Saturn's day, the Grim Reaper. And that number 13 is always associated with him because it comes back to the moon, which then ties us back to this matrix, the simulacrum, which is ran by time. This is why Saturn is Father Time. He runs this show. That's why in Judaism, Christianity, and all the Abrahamic religions, they don't actually know that they're just worshiping Saturn. They're not worshiping a Christ or a God or any of that divine stuff that they believe until they learn the actual truth of truths. They're just really worshiping Saturn, Father Time, because that's what this whole experience is about. It's about life. And when you die, you are with the Grim Reaper. It is your lifetime. So this is also called your life sentence. This is why when you wake up in the morning, they say morning, right? Because that's what you do when somebody dies. And you go to a wake when they die, right? That's all Saturnian. That's all language spells built around Father Time, the Grim Reaper, the one who holds the scythe. This is your psyche, your psyche. This is your soul, because the Grim Reaper harvests. That's what Rosh Hashanah is all about. That's what the Shemitah is all about, the harvest. So, this concept here around Saturn and Father Time, he runs the show because the most valuable asset while you're here in this matrix is your time. And how you spend your time is how you utilize your time determines the strength of your soul and its trip back and forth from spirit to matter. When you're here in this matrix, you walk with the Reaper. He's not your enemy. He's literally your best friend, a teacher of time and how to use it wisely so time doesn't use you. And one of my favorite quotes, which allegedly comes from this character Benjamin Franklin, I say allegedly on purpose, and the quote is, "Many people die at 25 and aren't buried until they're 75. I think about this quote often, and every time I do, it actually brings me so much life force, and it instantly motivates me to take action, believe it or not. So let's get into the stock market analysis on the Dow Jones, S&P 500, NASDAQ, and also share some quick thoughts on the DXY, US dollar currency index, if I could get around to it. We're going to be pulling up the Dow now. And don't worry, we'll be getting to this chart. So last thing we were sharing on the Dow Jones when I reviewed it was the 3 scenarios: bull trap, double top, or higher high bull trap, all of which had a potential for a correction into the fall time, which is right around the corner. And you can see right here that we've actually started to move forward with phase 1 or scenario number 1, I should call it actually. And here we actually have a very clean trend line to consider. We have 2 trend lines here. We have one, which was this prior resistance that we broke out of back on June. We rode on top of it, confirmed it as a new support after we went one leg up higher. And this other trend line, which I'm just drawing in today, which is showing a key support that we've backtested as of this Thursday that just passed. The idea here is if we were to break lower, we would actually be breaking lower on a 150-day support and potentially going back to retest what was once an almost 200-day resistance. So I do suspect that if we're going to go one leg lower, it would most likely be into this prior resistance line, and we'll see how support holds. But I do like how it comes in right at the bottom of the golden pocket. This is something to consider here because that's typically what happens after we start to finish off an automatic rally, which this was, even though it was an extremely exaggerated automatic rally. So we can now anticipate if we're not going to hold this level, the next leg down would naturally be your 618, and that aligns perfectly with what we're seeing here with this prior trend line. I could probably scoot this up a little bit just to be fair. If I was to turn on a area chart and put it on like maybe bi-weekly candle, I do think we could get some cleaner data here. This is what I like to do sometimes when, so probably like around there. Again, we're considering the best we can what's going on here. I think that's the cleanest. The reason I like this is we got a touch, fake out, and then right here a back test, maybe a double back test W, which was a bullish breakout, which is typical. So yeah, I really like that setup wherever that's at right there. We don't have to get super specific again. We're just using it as a guideline. And ultimately, we use these trend lines as a tertiary part of our overall analysis. But needless to say, this trend line here has effectively been backtested. We know it's a very strong trend line because it's been in play for about 150 days. And moving into the September timeframe, there's a lot to consider with what's going on right now since we're very overheated. And we do have about a month from today the next FOMC meeting. I also think very soon, I'm not entirely sure of the date, but the Fed will be doing their annual meetup at Jackson Hole, which I've been thinking about lately because it's like one of the most beautiful places in America. And it's one of the most expensive places for real estate. Absolutely gorgeous place. I think everyone should visit if they have a chance to, no matter what country you're from. I would love to get a place there and just like chill out for a couple of, maybe record an album there or something. It's a really inspiring place. It's so beautiful. Pretty much anywhere you walk outside, there's a mountain to look at. It doesn't surprise me that the global elite have found it to be a meetup spot. I've also remember some of these like apocalyptic movies. They tend to use Montana or Wyoming for their military bases and their occupation during times of cataclysm. So again, probably another reason why they hunker down there. But anyways, that aside, I was just bringing that up because I believe that data could be important. There could be some stuff to come out of that meeting. Again, if anyone knows the exact date, feel free to share in the comments of this video. Now, scenario number one's playing out. We have this trend line. I talked about everything we have going on there. And for me, I don't really see higher at this time. So I think we're on full-blown scenario number one, not considering a double top at this time, unless a miracle happens. And more than likely, let me pull up some of these moving averages and see if we got anything else to consider here. Alrighty, so we did close below the 8 simple. Let me turn off these drawings and make it a little cleaner. We do tend to have deeper corrections into the 55. You can see that 55 simple we were rejected on. After we topped out, we came below it, got rejected, and that led us another leg lower. Then we gravitated back to the 55 simple, rejected again for an even lower low. And then once we got above it, we actually started to respect it. And we put in a wolf cross right here of the 8 above the 55, since we're still holding the wolf cross. But once this 8 starts to slope to the downside, that's when we anticipate a little deeper correction. And this wouldn't surprise me if this all comes to fruition before the beginning of October. So this is gorgeous that we have this 55 simple sitting here at about 33,100 on the Dow. So imagine we go to 33 like after Rosh Hashanah, like something like that. And leading into next week's close, a couple weeks closes, we can see this wow, the 55 could be at 33,300 next week. The 333. And remember, I just shared how September 11th is 33 weeks and 3 days since Chinese New Year. So fuck, wouldn't that be incredible? Write that down, guys. We have to remember some of these things that I find on the fly when I'm just freestyling. So yeah, the 33.3 is also pretty much in alignment with where this would gravitate up to on this trend line. Support, prior resistance. Wow. Be really awesome if something like that was to go down. So just consider that level on a deeper pullback, and it would actually still maintain structure. So if I was to turn everything off, we can see low, higher low, higher low, going down to 33 on the nose, 33,000 points still keeps us in structure. And I'm going to be sharing some stuff about the NASDAQ in a moment that could be an argument to holding these levels and perhaps deeper corrections, which I know a lot of you are interested in, which is like a buying opportunity concept. Okay, so we're gonna pull this up here. We already have our data for this pullback to consider this major trend line here, which was a rejection point followed by the point at which we got over, and then we just rallied week after week after week. Now we're starting to correct, showing a sign of weakness, and we do have these 60-day corrections. Let me see where that comes as. Okay, right there into September 25th, pretty much in alignment with what we're thinking with a September full moon. So that's something else to consider. Now, we have this trend line coming in slightly above the 0.5 fib. If I was to move it up a little bit more, I think that comes into about 4,200 points on the S&P. That could be the initial first point to gravitate to on a deeper pullback. Keep that in mind. What that percentage would be is about a 9% correction. That's not too bad. We see that there's an average of about 19, 18% on most of these deeper pullbacks. That would be bringing you down all the way down to, yeah. Let me extend this out actually. You could do that easily by clicking, go to style, extend right line. And wow, yeah, that brings you into a double bottom into September. If we were to backtest the outside of this kind of descending, widening wedge pattern, or you could call it a descending, broadening wedge, whatever you want to call this megaphone-like pattern. I don't really care about that talk. That's type of TA talk. It's very much useful for some types of analysts, but for me, I really could care less about the names of all the types of candlesticks and all that. It's never helped really anyone. I know that some people believe in it, but it's the exoteric stuff, and it's the esoteric that really gives you an edge on the market, being able to determine pivot points, etc. And you guys are well aware of this. So anyways, moving on, we have some of our deeper correction targets. And then we do have the 618 sitting right here, which was a key level we got rejected off of, which is very significant because off of our initial pullback of about 24%, we bounced pretty high before a much deeper correction. So I like this level to be backtested, and we did backtest it pretty much got within it. And on the close, it's putting us at the 618. So that's just copying over pretty much what I was saying about the Dow Jones on this trend line right here, this falling trend line. Let's go to the NASDAQ. I actually believe this is similar, everything I just said. For the S&P, we have the bottom of the 618, and then you could see right here, slightly below the 618, we have this touch point, which was similar to what I was just talking about in the S&P. And that would be your first level to gravitate down to on a deeper correction. But I have this chart prepared for everyone right here, and I can't wait to share this because I think it's very experimental and interesting, and it has everything to do with the blue moon analysis I did on the stock market. So I want us to look back at this 2007 to 2009 structure, pretty much 2007 through 2010, with the blue moon on September. Let me see right here. If I go on a monthly, it doesn't show. If I go on a weekly, maybe it'll show. Okay, so this looks clean to me now. I need to go on a weekly though to show you both. Alrighty, family. So what I want to consider is that I haven't seen too many iterations of this type of recovery. When we get our crashes, they're either super quick or they continue much longer. But with this type of space between our current all-time high and how much we've recovered, we don't see too much of that historically, having such an incredible buyback. But we do kind of have something like that back here in 2007 to 2009. So I want to go back to there. Now, I know this was in the housing crisis. It didn't affect most of the NASDAQ as much as it did like the S&P and the Dow, because this is mostly tech, but this was a 50% pullback or so. This was about a 25% pullback, maybe not even a full 25%. But what I'm focused on here is the fractal and the structure. I want you guys to be aware of that before we get into things, because it's not me saying it's exact, but it's pretty close. Okay, so let's go through the play-by-play. First, we have a blue moon, followed by a top, followed by a deeper correction. We have our blue moon here, we have our top, followed by a deeper correction. And then you can see we have our correction time from top looking at about 300 to 400 days, from our top to our correction, about 300 to 400 days. And then we gravitated up into the golden pocket right at the next blue moon. And look at that on our charts. We gravitated right up to it perfectly on the next blue moon. So you see how it's the same exact structure, matching even with the fibs? It's pretty incredible. Now we're going to zoom in a little bit more, and you're going to see that in this iteration right here, we hit the 888 fib. Boom. Now if we go over here, we're going to see we did the same exact thing on a wick. We hit the 888 fib, identical. And we came right back down to the 702. Now, if we go over here, you can see that we came down to the 702. after hitting the 888. And we played along that level actually for about 119, 119, for about 120 days before actually rallying a little bit more. So I'm not saying that we're going to just recover out of this. I mean, it's very plausible given that I do believe that in 2024, we're going to have a bull run for crypto. But I just wanted to share this structure and how similar it was. And this could maybe help us dabble into theories about what could be happening next. But I think thus far, this is an almost identical structure. And we did not quite get as deep as the bottom of the golden pocket. Like we never touched the 618. But here, we're about 4.5%, 5% into potentially backtesting the 618, which would be in alignment with kind of the energy that we've been getting in the other two major indices that I just reviewed. So I'm not saying that this is the way that we move forward will be identical to this, but everything thus far has been identical. I'm just sharing this. I would love to know your thoughts, how you guys feel. Of course, back here, we were in a serious crisis going on with the mortgage, subprime mortgage. You guys know it. It was the housing crisis. And this was pretty worldwide. And what I'm hearing right now about talk of CBDCs in Europe potentially, and everything that I shared in my Yellow Bricks Road Decoded, and the fact that I know that the housing market is topped out already, and there's already issues in our housing market that have become exoteric, like they're spoken of, and professionals out there have shared their gnosis. It does seem like we're having a little bit of an issue, but we have a demand, supply and demand issue this time around. Back then, the really big issue was when you wanted a house, even if you had no money and a rock bottom credit score and you didn't even speak English as a first language and you barely knew the contract you were signing, they would just check your pulse and be like, okay, your heart's beating. Here's a house. Like, can you write your name on this paper? Oh, good job. Here's a house. And you barely needed any money down. But this time around, you needed some cash down. You did need to have principal. You did need to have a decent credit score. I mean, everything that's gone on since COVID, you get the picture. And any real estate agents that are in here that have have expertise in this, I'm by no means an expert in housing. I've admitted that, and that's why I love our community, because I know we have people that are aware, that are in the know, and that's their daily job. Every single day, they're focused on the housing market, selling houses, trying to make deals in that market. So feel free to share your gnosis on that. It would be very helpful for the community. Maybe share that in the Discord to know some of your thoughts now that I've revealed this structure regarding 2007 to the 2008 correction and how we rebounded out of it in a very, very similar pattern. Everything from the blue moon to the top slightly after it, to the deeper correction after the top, to gravitating directly into the golden pocket on the next blue moon. Same thing happened this time. Now, remember, the NASDAQ can have a 20 to 30% correction in just 2 to 3 trading months, which would be like going back to our current cycle lows from October 22, essentially by this upcoming November, which seems like it would require a black swan event in order to make that happen. And with everything I've been sharing about the end of this Jubilee around mid-September, that would not be surprising to us if something triggers an event and a devastating sell-off. Remember, during the Black Swan event right here of C19 in March of 2020, that was exactly a 30% correction for the NASDAQ from top to bottom in 34 days. And then we recovered to an even higher high than where we were before the pandemic started in February, just 70 days off the crash lows and onto new all-time highs again. So let's consider a sell-off from our current microcycle top on the NASDAQ at about the 888 fib, what we've gotten recently. Let's just assume that's the top for now. Starting in the week of September 11th, if we were to go over 35 days, about 5 weeks, that brings us into October 16th. That's literally just after our solar eclipse. Then imagine after October 17th going over for 70 days, about 10 weeks, which would be the same recovery time as the C19 crash. This would be bringing us to December 26th, right around Christmas this year, a little after Saturnalia. So this correction can all go down very quickly based on past data. And this isn't weird. I mean, this has happened many times. Even this correction over here, if you see the time of recovery and you take it out, it's about 119. Keep seeing this number now. It's about 120 days. And we did go slightly higher. We maintained an uptrend and continued up for quite a while. If we were to consider 119 days off of that level there in, I believe it was October, you're looking at February. Now, that's not weird at all to see recovery by that time, given prior data that we have for the pre-election years, which I'll be getting into in a moment. So I kind of intuitively feel that even if we do get a deeper correction, that December 2023 into January 2024 at the beginning of the year can actually be we could be at similar prices to where we are today, even if we have that deeper correction between now and mid-October. So it's pretty fascinating, and I'm going to share some stuff on Bitcoin in a moment that I believe is pretty compelling to that theory. Now we're going to quickly glance at the DXY because we know the DXY is having a little bit of a rally, but so far just lower highs and continual lower lows. We're on a perpetual downtrend. We have a high, lower high, still a lower high. We have our low, lower low, sorta, but definitely a lower low here in July. We're rallying off of that, but that's typical. And we are getting pretty much the same RSI data and everything else that we're getting week after week. If I was to go on a daily chart, you'd probably see that we're slightly getting into the overbought territory at this point, which on the last 3 times we made it up to 68. We got rejected and had a deeper correction, and this is just zigzagging along here. Now, the reason I shared, let me turn this like that. The reason I'm looking at these 2 arrows right here is because we do have this resistance level, which comes in at the 382 fib. This 382 fib is considering our high going back to September 22, which was the end of the Shemitah, of course, when the DXY was up. You gotta love how that works. And then right over here into, well, pretty much July, when we saw the market top out, right? Because it's always inverse what we're getting on the market. And now we've gotten recently a pretty noticeable correction, so we're seeing a little bit of a rally on the DXY, obviously. Now, this is very kind of a trigger point for me, because I shared this on my recent interview that I did with Bearable Bull, how I do not like how gold is correcting right now, because this shows me that if the stock market is correcting, if crypto just had a super deep flash crash a couple days ago, and precious metals are correcting, I don't see silver having as much of like a part of this conversation as much as I feel for gold, because I'm thinking about the wealthy elite right now, and like they're clearly not de-risking into gold. Gold is just perpetually selling off. The stock market has been selling off the same way that the crypto market has been selling off. So where is the money going? It's going into fiat. Think about this, family. Money is going into fiat, which means that the elite, the wealthy, are getting ready to buy this dip. They're preparing themselves. They're situating themselves. So how do you become wealthy in this game? You follow the money. You heard it here from Chief Wolf. This is definitely important to realize. Gold is correcting at the same time as the traditional market. But getting back to this, of course, if we were to have more rally on the DXY, we're going to see that as a correction in the stock market. If we were to get rejected off this point right now, we would see further continuation for the stock market. And we've been effectively trapped in the zone now for 250 days. So we had this rally, of course, because of everything the Fed was doing, but now we're starting to get a little more on the sideways action, which is typical. I just want to consider this right now that we've back tested the 786 on this macro pull. You could see that from here. We have from 2017 down to the swing low of 2018, and we have our golden pocket. We have effectively hit the outside of it. So if we're going to see a deeper market crash, a deeper market correction is what I should call it, I do think this 105 level would be the next level to consider. Now, if we get a partial rejection right here and hang out at the 236 on the local fib pull, then that would also be normal. Just consider all of this. And a deeper correction obviously would be in the cards for probably moving into like January, February, March, when we have some recovery for the market, and of course, perhaps a new bull run, which I know everyone is starting to anticipate for 2024. So let's get into the crypto market and review some of these charts, starting with Bitcoin, as promised. Let's review that recent flash crash for Bitcoin. So now we talked about this idea of it mimicking the 2012 August blue moon flash crash. One second. I'm just going to zoom out here. So we're just going to quickly go to the 2022 timeframe. This is really going to blow people's minds, by the way. This is a really important part of today's presentation. I know everything else has been gems on top of gems, but this is really, really fascinating because I know you guys are particularly interested in crypto. So we had August 2012. We had a blue moon. We had a flash crash right there from the 17th through the 19th. Now, one key data point that is very interesting is back in May of 2012, we started a solar cycle. And remember, this year on April 20th, over here, we started a solar cycle. Then this really blows me away. I didn't even think of this and consider this data point until I started to prepare today's podcast. But that is just crazy how similar this entire setup was, and we're going to show the play-by-play. Now we're going to go back to November of 2011. Okay? November 2011 right here, we have a market bottom. Then we have November of this year, market bottom. And the market bottom in 2011 was on the 19th of November. The market bottom this cycle was on November 21st, just a couple days off. This solar cycle starts here. We were moving up into our solar cycle as we did both times. Then we have the blue moon in August. We have a flash crash on the 17th through 19th, just like we did a couple days ago. And what happens next? We rallied into our next solar eclipse, and then the following third solar eclipse. We held structure. So that was your flash crash in August after your bottom solar cycle start, August flash crash. So we have here, bottom, solar cycle start, August flash crash. I just want to consider this data from the past because it could be helping us today. This second solar eclipse, we were already on recovery about halfway through the top and the flash crash level. So imagine it's around the 0.5 fib of whatever that pull would be. And our upcoming second solar eclipse of this season would be on October 14th. It's the solar eclipse we keep talking about. Now, if we were to consider that data, that would kind of put us somewhere between 28K Bitcoin around that solar eclipse, not leading into it. Just think about around it. We want to kind of be open-minded right now because, again, we're looking at data from all the way back in 2012 when Bitcoin was like the only, man in town, and pretty much nobody knew about crypto back then. Very few people, and it was a super low price, super low market cap. Today it's much different. It's a household name. Everyone knows about Bitcoin. Much different story. So I just think that it's so cyclical to not consider and to not pay attention to. That's really the point here. So again, our second eclipse will be on October 14th, just about 2 months from now. And our third solar eclipse is on April 8th, 2024. And these two eclipses make up the Great American Eclipse. I've talked about this quite a bit. Now, what's so interesting about 2013, if we look at this time frame, is the way that we rallied into April 10th right here. Note, our third eclipse this cycle is April 8th, this upcoming year. And we rallied perfectly into April 10th of 2013, just a couple days off, just like the bottom of our cycle back in November 2011 was just a couple days off from the bottom of our cycle here in 2022. We have a 2011, that's the 11, the first master number. Then you have 2022, again, 22, your next master number. So that means in 2033, perhaps we get another bottom, and that'll be, but that's very far away. We're just kind of having fun now with these master numbers. But now, by 2013, moving into this next solar eclipse, the third solar eclipse in the cycle, we were already breaking into price discovery. At the very beginning of March, you could see it right here. So that was your cycle top. Right here, you were breaking into price discovery in the transition of February into March. Now, that would be really mind-blowing if we had a 70K Bitcoin by March 2024. I'm not saying that would happen, but that'd be pretty mind-blowing. And typically, we see Bitcoin enter price discovery between the third and fourth solar eclipses during the solar season, and that happens to be situated after the next halving. So that the third and fourth solar eclipses in our solar season is between April 8th, 2024 and October 2nd, 2024. And I believe the Bitcoin halving is near the end of April 2024. And we know this month of April is very special for Bitcoin and in crypto in general, and it's one of the best months for XRP. So keep that in mind. Now, moving on to the next cycle in 2015, again, we have this August 18th flash crash. This was my point to make a couple weeks back about how to consider the month of April to have a flash crash in these particular dates. So we've seen a couple of these iterations, and again, we saw it happen this year, as you're all aware. That was during the end of a lunar cycle, by the way, not a solar cycle. Literally just a couple weeks before we went into the start of we ended off a lunar cycle. So just a reminder, this was just a couple weeks before a lunar eclipse, and you guys know that during lunar cycles, lunar eclipses are brutal. If you're new to my work, I just want you to be aware that, for instance, we were in a lunar cycle in 2022, pretty much the entire year. And in the lunar eclipse during the lunar cycle of May 2022, we had the Terra Luna ritual, and also during the lunar cycle of the lunar eclipse on November, we had the FTX ritual with Sam Bankman-Fried, and that was the bottom of our market so far. And we aren't in a lunar cycle anymore, but notice how even the tail end of the lunar cycle back in 2015, we did have that deeper correction. And I want to go over now to the fact that we did have an uptrend after that August flash crash. That's really what matters most. Now, I want to go over here to this flash crash we had in August 2016, excuse me. This was during a solar cycle. So you can see the solar cycle started back in March of 2016. Rally, we have our flash crash in August as usual. And then we continued up after that. So we're seeing a similar thing happen over and over and over again. And 2016 was in a similar posture as well. We had a bottom 180 days before the start of the solar cycle, and we topped out about 80 to 100 days later. Then we had a flash crash in August. Back in August 2012, from peak to full recovery, it took about 160 days to recover off of that flash crash. In the cycle around November of 2020, excuse me, let me see right here. Right here. So we had this moment right here, which I haven't really talked about too much, but it took us about 180 days to 204 days, 200 days. I want to keep this super simple for everyone. I just want us to consider 180 days to 200 days. All right. That's what we see Bitcoin likes to do on these cycles. Here you can see a similar thing. It takes us about 180 to 200 days to get out of these sideways moves and move up after these big volatile moments. So if we were to consider off of our local top 180 to 200 days, that would bring us to around the first week or so of January into about the start of February. Okay, so we could actually be seeing a 30K to 31K Bitcoin by the end of this year on our yearly close. And by January 2024 into February, we could be breaking into a new microcycle high, which is 32K or higher, based off the prior data I just showed you moments ago. And that's pretty much on par with what we see in the pre-election year data as well. This is really motivating to me to make sure that I'm positioned for whatever downside we get before the end of this year, specifically before the end of October. We're really in the final moments of this as we speak. Again, it's important to be reminded that we're still in a Jubilee year, and a Black Swan event is possible at any moment. We need to be prepared for this, and don't let your emotions get in the way. Invest your attention into dialing in your plan now, so that if and when the market comes to you, you are positioned in a way that you can trade your plan. September and October of this year are very special. We're one of the few communities of this size that are aware of this, so it's important we stick together during these times. Collaboration is everything, family. It's really important. So now I'm going to be moving on to a couple more Bitcoin charts. Again, I've been putting a lot of work into these podcasts lately. I know they're a little longer than usual, but it's so key for this time frame we're in right now, and I know that you guys are appreciative of it. So we have this Mercury retrograde analysis. I'm just going to briefly recap what we're reviewing right now. Every one of these boxes is a Mercury retrograde. We could see that most of the time, about 70% of the time, there's 10 iterations of this so far. This was your C19 crash, so this was a Black Swan event. But 70% of the time, Mercury retrogrades are negative for Bitcoin, meaning price is going down and you have losses, average losses of about 11%. Okay? So that is measured by the first day of the close into Mercury retrograde to the last day of Mercury going, basically when Mercury starts to go direct. Now, 3 out of 10 of Mercury retrogrades, we actually had gains, and they were big moves to the upside. Average gain was about 44%. So that's pretty fascinating. We could see these 3 iterations there. Even if we were to consider the lower end of the data of about 23%, we did rally up through it at the end. Here we topped out perfectly at the end of Mercury station retrograde, and here we had Mercury retrograde pretty much right into our all-time high. Perfect. So we could consider that we usually go down, but we were also in a solar cycle from here to here. Now, I didn't track the Mercury retrogrades going back. I really should, but I don't like this 2017 to 2019 cycle too much because we haven't been mimicking that as close as we had the 2016 cycle. So I could take the time maybe in a special podcast, or maybe I'll dedicate one to only those Mercury station retrogrades. I'll see what I could do. Like maybe I could do that the week before the end of Rosh Hashanah. But needless to say, if we were to utilize this data, if we were to get a move up of about 20% or a loss of about 11%, given where we're at right now today, I'm going to go on a daily chart. Let's just say we were to start on the 23rd right here at about 26K on the nose, an 11% drop. Mamma mia. An 11% drop would actually bring us into 23K, which would be still holding a higher low structure. Until we really break below this 20K region, I'm not too worried, but I'm just sharing my intuition on this. I think anything below 25K Bitcoin is a buying opportunity, to be completely honest. I know some people might disagree, but based on the cyclical data of Bitcoin, when we're in a solar cycle, we never go lower than those lows that were planted in. And what I just shared with the August flash crash data, we could even consider that this might be the lowest Bitcoin goes for now. And if that was the case, if we had a 20% rally, that would be putting us pretty much back testing the exact level of our current yearly highs. A little unlikely, but I mean, Bitcoin has been sideways for a while here on this pattern before we broke down. And overall, we've been sideways in this range for 150 something days. Double testing this 25 range after we hit it twice on rejections. So that's why this 25K range was so powerful. And if that was the case, if we were to move up one more time into the end of Mercury station retrograde, like if we made it back up to 30K, that would still be in alignment for maybe another larger flash correction into the month of October. I mean, think about it. If the stock market could correct, if the NASDAQ could correct so much in just 30 days, of course, Bitcoin can. Bitcoin's way more volatile. So we could even come back into 20K again, perhaps fulfill the bottom gap on this CME chart right here, which is right there between 20 and 21. And then boom, that's your low for that cycle. And that would be one of the most incredible buying opportunities, in my opinion. I'm not going to be splitting hairs here, though, between 19 or 18K and 20K. It doesn't matter to me. As I said, anything below 25 should be great. And that would be also bringing a great buying opportunity to things like Ethereum and XRP. So I hope you guys enjoyed this Mercury retrograde analysis. Again, if we were to have that 11% correction on average, it would be bringing us to about 23. And that could be by the start of Rosh Hashanah. And if we were to move up, we could be going as high as about 30, 31 based on the way that we move when we move up during Mercury retrograde. So have fun with that analysis. Any astrologers here that have more data to add because you are a specialist in the charts? I'm a little bit more interested in sidereal when I'm, hearing back from you guys. But anyways, have fun with it. I would love to know your thoughts. Now we're going to move over to this firmament dome chart. I saw a pattern I just wanted to quickly share, and it has to deal with these pivot points coming back to the number 96 and 69 because that's been a pattern this entire year. We know that Silicon Valley Bank failed on the 69th day of the year. Bitcoin's current all-time high is 96,000. And if we take off this pivot low right here to this deeper correction on March 10th, the 69th day of the year, it was 69 days apart. Then if we take from this correction over to this pivot right here at the bottom, they were 96 days apart, 69, 96, as above, so below. Now, if we took off of this level right here on the pivot over 69 days, it would bring us to right here, August 23rd, the day that Mercury is retrograde, okay? So if for whatever reason it ends up being 96 days, you could consider that pattern to September 18th. There you go, the first official day of the new Hebrew year. Either or, it's significant in everything that I've shared today. So this firmament dome analysis is pretty fun. Now, again, if we were to have this move up to that bullish move during Mercury retrograde, it could even get slammed on this firmament dome, hit 28, and then keel over. It's totally possible. It would still be within what we get when we're moving up. It would be a decent move. It wouldn't just be like a measly 1% or something. I mean, off of these levels right here, if again, like I said, if we started Mercury retrograde at 26K and we made it all the way up to 28K, I mean, boom, right there. That's your 11% on average. We get that on losses, so that wouldn't be weird on gains, right? And it would be a really bad rejection to get because not only is it on the outside of this firmament, which has been in play for 260 days, but it would also be below this level here, which was acting as a midterm support before we had this flash crash. So getting up to this level and rejected again would confirm this support as a resistance. That wouldn't be too good. So that would still give an opportunity for a little bit of bullish energy before the end of this month maybe, or into the early part of September, and we could still get a noticeable correction into Rosh Hashanah and October, like I've been sharing most of this podcast. So we have this firmament dome analysis, dope. We had this analysis we've talked about already on my YouTube video, so nothing really to cover here. Backtest this key range of 25. Let's look at the weekly close so far. We're going to turn off all this noise and get through Bitcoin pretty quickly. So far, if we were to close where we're at right now, that would not be a new weekly closure low. We would have to technically get below $25,900. So as long as Bitcoin can hold this level right now, we would be holding the structure. But if we were to get below this 25.9, that would really seem like a weakness. And I would not be surprised if we went to that 23 level soon. But the month of August is a little more neutral during these pre-election years. So yeah, I mean, it's really just kind of a waiting game at this time. I think all of you are aware of that. Once we had that flash crash, we're still just ranging. So buying at this level right now and getting too ahead of yourself, I don't think is the safest. I think it's much better to wait this one out a little bit. Again, that's just how I'm playing it, and this is not financial advice. I'm not telling you what to do by any means. It's up to you to develop your own investment thesis and go with your intuition and what you think is best for you. But as I said, anything below 25K Bitcoin seems like a buying opportunity based on historic data. So that's one thing to consider. Let's look at our moving averages. We're probably below a lot of the key data right now. So let me pull this up. Let me turn off the drawings here. Yeah, we're below the 34. We have not been below the 34 EMA in a while. Pretty much since we corrected a little bit before that March 10th crash. And I believe all of our EMAs are now moving, sloping to the downside. So that's not the greatest, but that's typically the energy that we get before a little bounce. We got our 55 simple actually sitting there perfectly at around 23.5. Okay, we talked about the 23K region a couple times. So that's a key point to make. If we're going to go lower, it's most likely 23. If we're going to go higher, it's most likely 28, maybe 29. A new high right now is less likely until probably moving into December, or at least late November. All right, family, let's move quickly through ETH. There's really not much to say because this is just copying pretty much what Bitcoin's doing. We had a much deeper flash than we got on Bitcoin, but we got bought back up to where we were around the June timeframe, and we did not go lower than where we were in March. So, yep, still just ranging. And actually, if we zoom out, we can see that this was a key level to come back to. If I was to turn off all this noise, you could see what I mean. Where this is trading at right now today, this was a false breakout, and this was your correction point. Then you got resistance, tons of resistance here before this flash in March, which again was a downside fake out or a bear trap. And then we came back to this level, and this is our second time coming back to it since we've been treating it like a support. That's good. So consider that like we actually are starting to treat this 1650 to 1700 range as a very key level for ETH. And I like that. And if we're going to go lower, like if Bitcoin was to go to 23,000, like I said before, anticipate a $1,400 ETH. I believe that'd be a good buying opportunity. But we're talking about 1,200 to 1,400 is your range on the lows for a potential deeper, an altcoin correction. You know what I'm saying? So that would be, I believe, a really solid place to accumulate. Now we're looking at XRP. Okay, so I shared this already in my YouTube video, and that could very well be the case of a short-term buyback on XRP to around 61 cents. We have 59 cents as your 382 fib on your macro pull. So that's from your April 2021 highs to this swing low right here in June, which has maintained our low, and we've been holding a higher low structure since. Even with this recent flash crash, we still had our daily close above the prior daily close lows. So it's all good in the hood. Now, we have this sharp correction, which typically means we like to gravitate back to the level that we broke that was holding as a potential support. That would be in alignment with like a buyback of 28,000 for Bitcoin. So just think about that. If Bitcoin was to make it back up to 28K, smack on this dome one more time, that would be probably where I see a 62 cent, maybe 60, as high as 63 cent XRP. You never know, on the wicks, you could go a little bit higher. Then there, I think you probably get rejected again. This was too fast of a breakout, and it fell just as fast. Again, we all know the story. I've been talking about de-risking at 83 cents through 90 cents for the longest. I made videos about it on YouTube. I talked about it in interviews 6 months in advance before it even happened. I de-risked effectively at that moment, and the reason for de-risking was because you never know how this coin is going to move next, but it usually does a Bart Simpson head, which is exactly what it did this time. So I know that there's hopium for some sort of recovery based on some bigger YouTubers' analysis. I'm not going to call out names, but they're talking about that we were supposed to have a breakout immediately to new all-time highs for XRP after this move. And I was adamant that that wasn't the case because the SEC case, in my opinion, has nothing to do with price discovery for XRP. And what would really bring price discovery for XRP is either one, a Bitcoin all-time high, or a shitcoin washout, which flows all that liquidity away from the nonsense into the utility. And that's where XRP would have its time to shine. I believe that's a much plausible theory than just looking at fractals from the past. When we look at Bitcoin, it's a lot easier to play that game. When we look at XRP, it's not the case. This coin is just Bart head after Bart head, or what I like to call crown top distributions over and over and over again. It's a trader's coin. It's fun to hodl, I guess, but ultimately the only real way to make any money or profit off of this thing or to de-risk effectively is utilizing the times where it initially starts to go, because it doesn't last too long. And this time was no different. So this is very disappointing, actually, that it continues to do this and that it got back into the 50-cent level. But as I said many times, if we get back above that 54-cent level, we should anticipate moves up to 60. I said that back here in all of this nonsense. And it was crazy to see that in a single daily candle, we swiped through all my levels. That again was very exuberant, too fast, too quick. And now that we've come back down to this, the only thing that I could think was some analysis that I just shared on the Bearable Bullish channel, which is this trend line right here. I'm going to go to this chart. I believe it could be helpful. And I'm going to turn on the area. It's right here. So this is looking at bi-weekly candles. We have our first rejection, second rejection, bull trap, huge correction. Then we broke through this in July and now we're back testing it. So I really like this setup. I think this is pretty bullish. And then what I was sharing before was the daily chart and how we do have a little bit of a daily close uptrend right here. If I was to turn it back on area, actually, you guys could see that's pretty clean. So holding this and this major back test that I've shown you on the biweekly candles right here, this is the biweekly. You want to be looking at this resistance line, which is now being back tested as a potential support. And then on the daily, you have the short-term information, which is going now for about 100 days. And we've bounced. So yeah, if we get up to 60 and then come back to this, you have 52. Most likely there's an opportunity actually to go even lower if we do have like a black swan event, if Bitcoin comes back to like 20K and things get really shaky in the overall market. Anyways, anything below 45 cents again for Bitcoin is a buying opportunity. It always has been. I personally didn't buy any time this time around because I want to just wait this out. I'm being a very patient wolf. So I thought 42 cents was an incredible opportunity by all means, but I want to wait it out a little bit. I don't care about getting the perfect bottom because ultimately I've been a long-term accumulator of this. I only de-risked up here. I didn't take crazy profits, but I took enough to get my initial investments back and then some. So I'm more than happy. And I was talking about a 50 to 55 cent XRP for weeks. I've brought that up even on a tweet that I released. Again, go follow me over there on Twitter if you guys want more frequent updates. But I shared this idea back over, I believe it was right here, where I said that the 34 EMA and the daily needs to hold, or else this is heading down to 58 cents to 55 cents. And as of today, we're literally trading at 55 cents. So there it is. We had our daily close come in at about 50 cents just a couple days ago, and that didn't last long. So we're really moving the way I'm anticipating. That flash crash was a little bit overextended, and thus far, we're kind of just in this range. I believe a buyback to 60 is plausible. 28K Bitcoin, 62 cent XRP, and ETH will just follow suit. Now we're going to head over to Uniswap. We're going to put on candles, more traditional analysis. Okay, so we have a lot of data here. we have a total correction of about 93%. That's what we always get. I suppose this could be your automatic rally right here. Yeah, it is. So after your deepest correction, you moved up to the 382. Typically, you want to get above it and start trading into the 0.5 and higher, but this is obviously showing a sign of weakness, meaning retail is all that's left here. There's no big money. It's been on a perpetual downtrend without much of a relief rally above the 382, so weakness across the board. Now, this is really troublesome if this cannot hold this level right here, pretty much where we came down to. Let me look at the weekly and see the story. Yeah, if this can't hold, this is going down to here. Now, I'm going to have fun with a quick fib pull so I could see something. Boom, there you go. All right, so look at what I did. I took from this closure low right there on that candle. I liked that candle pull because it was right there on this data, which is like your double bottom thus far. And I pulled it up to this swing high. And you could see my 1618 is perfectly in alignment, this golden ratio with this bottom red line that I shared. So ultimately on weekly closes, you can definitely see a $2.35 Uniswap by the end of this, sometime in Q4, maybe before the end of October. And Wix can go as low as $1.70. Now, this thing can keep going forever. This doesn't matter. Whatever this project is, really a bad chart. And if you see when it started after the C19 crash. So it doesn't have the data to tell us how does it take a big hit during a black swan. So a black swan on this could be real nasty. And I guarantee you that this thing can swipe all the way down to $1 real fast. It can go right back to where it launched at. So I would be very cautious holding stuff like this. I'm aware that this is an exchange. I know it's big with the people in Hex. But anywho, did Hex delist? I think they deal. I'm not sure. It doesn't really matter. But the point is on this is that this chart is not looking so great. I believe a full 95% pullback is absolutely in the cards. That's in alignment with this theory of what I just pulled in that reverse fib, into the end of the year. And I would not consider that a buying opportunity for a project like this. I would just wait. I don't have a lot of faith in stuff like this, to be completely honest. I need chart data for real. I need data. And I'm not big on diversification anymore as much as I used to. I think you could win this game with much less than 10 projects. And when you start adding stuff like this, it's just like gambling. It's beyond gambling, actually. It's the most volatile asset class that exists. So I get worried about this kind of stuff. Now, after the Bitcoin halving, leading into May of 2024, if I start to see chart structure and I start to see this thing breaking and reversing the way that I like to see it, and it meets my conditions, then I might consider what's up. But in the interim, not interested. Okay, we're on this project called a cash network. It's clearly on an automatic rally essence, but it has had quite a pullback. We're talking about 97 to 98% from launch. Again, in a similar situation where it doesn't have the pre-C19 data. It has not traded through a black swan necessarily. Like a global black swan. So if we're going to have anything else that comes up, this thing can definitely come right back into 22 cents real fast. I could identify that level quick. So you're looking at about right here. And then again, you'd have this secondary level that's about right here. And then what I would like to do actually is pull a reverse fib. Oh no. Yeah, this could spring to 12 cents. So that's most likely what's in the cards with this. So let me pull a fib and see what we're getting as of now. Oh yeah. Excuse me. So we have swing high to swing low. We have a move into the golden pocket. This is most likely going to crater fast, hard. Okay. So we're looking at a possibility of doing something like this. We go to the 236, and then after the 236, you go spring into Hades, and who knows? This can go to 10 cents. And then that would just continue price discovery to the downside. This thing's still on price discovery to the downside. because the all-time high is over here, and that was when it launched. It doesn't have any chart structure. But this is clearly an automatic rally. So if anyone was positioned between here, below this 236, like anything in the 30-cent region, this is pretty much where you want to de-risk. Like, I mean, if Bitcoin does make that last move into like 28 and maybe ETH kind of, there's some juice that comes into this thing, then maybe. I'm not really entirely sure how this has been moving up lately. It doesn't really make a lot of sense. It's an isolated incident, but after something has had an almost 98% correction, like, it is what it is, right? With so little data, it doesn't take much to move this market cap. Let's just keep it like that. Now, we're coming up into a critical level here, which was right at these potential supports, which then we broke down, we back tested, and that's what led to this thing really cratering. And we're right back in that area now. Clearly showing a sign of stopping out with this wick to the upside, and just the nature of that sort of pullback. I think this is all happening today, by the way. So today could effectively be the top. But if it is going to move higher, just look for the 702 fib, somewhere around $2.10. And I don't know if it could go higher than the 786 right now. That'd be really strange. But you know, anything's possible in the matrix. Just because it lacks data, though. Now, that's me saying that this is not a good time to FOMO into this shit, because it doesn't have much to go up, and it's more than likely to reverse now into October. And when it reverses, it could probably go down as fast as it went up. Keep in mind, I'm not personally interested in stuff like this either. Again, very limited in chart data, not much to trust here. Fun play, though, for anyone who got in at that 25-cent, 30-cent range. Decent play, for sure. Okay, we're looking at Cadena. Oh my God. Yeah, Christmas tree. It's a KKK pillowcase hat. Okay, jokes aside, this is really not good. I'm going to pull a fib like this. We're going lower. Okay, so 21 cents. So this is a really key level because I'm taking from this prior support, which broke. We back tested it a couple times, about 3 times before we continued down more. And that's a clean sign that you're going to head to the 1618, which would be actually going even lower than your launch prices. This thing has lost 98.5% of its value. It's on its way to zero, essentially. No data before C19. I don't like that. I actually said that in the last 2 projects. Yeah, it's not good. No real automatic rally along the way, so another sign of weakness. It's currently on to another leg lower at a time where a lot of the market's actually been going up higher since the year of 2023 has started. This thing's been going in reverse, so another sign of weakness, and that retail is just perpetually selling this off. I would never touch this project. This chart's really bad. Be cautious with this kind of stuff, guys. I don't know if this stuff can make it into the next bull run. A lot could happen between now and then, especially any regulations. Stuff like this is going away fast. Whew, yeah. Okay. Yeah. This is probably going to 21 cents. I have no real positive thing to say. At best, maybe $2.40 at best, if it can get a relief rally. But most likely, if it's going to head back up right now, $1.40 is going to be a very difficult line to break. Now we're going to finish off on XDC. We had, again, this is the Red Pill podcast. Things get spicy, but we're telling the truth. We don't have any time to lie to people or sugarcoat. Okay, so XDC completed its automatic rally. I already said this. Again, I'm just doing a quick recap because people were interested, and I'm not going to talk about this coin now for a couple months because we've been touching on it too often lately. And yeah, we've already completed the automatic rally. So what's more likely to come now is because we broke below the 0.5 fib, you're looking for the 236. The 236 is in a decent posture because we can see right here that we could have a little trend line support. And I say a little to be like kind. Yeah, a little bit of trend line support. It's actually a pretty nice trend line. Boom. Fake out. Back test. Back test. Back test. Boom. So coming back to this trend line is nice because it's right there on the 236 fib. And if you can hold that, lights out, double bottom. And this thing didn't want to play much lower than 2 cents because we touched down there in July, then went back slightly lower for a moment, and then ever since it dipped there, it was clearly to finish off the final bit of liquidations and panics and just weak hands, and this thing went to rally on to a pretty impressive run. So from the support bottoms to where it went up, wow, 300%. This coin moves like really drastically. We know the last bull run, if you take from this big horizontal range, which is fair, and you move it all the way up into about where it went on multiple tops, it's 20,000% gain. Okay, family, so I'm just going to leave it at that because this thing's more than likely heading down. I'm sharing my quick thoughts. I think this trend line is something to consider. Somewhere around 3 cents on XDC is more likely coming soon, at least into October. And I hope you guys enjoyed today's Red Pill podcast, packed with information. I'm really looking forward to hearing some of your thoughts and to seeing how next week goes in this market with the 15th annual BRICS Summit. And I'm already looking forward to next week's podcast. I appreciate every single one of you. Wishing you a beautiful rest of your day in the Matrix. Much love.